All right, good morning. Welcome back here to Trader Minute. Great to have you aboard. Lots going on out there, so let's delve into it here. Let's start with the challenge. We have two positions on the board: Valero and Honeywell. Let's take a look here and put the pricing into it and see what we have to change. Valero sitting at 337, and Honeywell is sitting at $1.99. So 199 and 337. So pretty much no change since I was on video last, right? And I say that a little facetiously because, if you watched how the positions moved, right, after I got off video yesterday, right, there was some interesting movement. I'm not going to call it dramatic because, it wasn't all that big compared to, what we have seen historically, but we basically have money coming out of Honeywell and going into Valero. So basically our Valero position has increased and our Honeywell position has decreased, but the net challenge value really hasn't changed all that much. Now Honeywell is getting close to its stock exit level of 172.33, but has made a charge here in the last 15 minutes that keeps it out of the stop level here. So we'll be holding that here this morning. We are coming up on the auto exit date, red here this afternoon. So, it's going to need to make about another $1.20, $1.30 charge here to be able to hold it. Hopefully it does. Hopefully it does. And then Valero, I mentioned when we got into Valero that, this is a stock that can move and can be kind of random. If you look at Valero over the last 2 days, really since we've gotten into Valero, it's been pretty calm. It's been really calm, right? So, if you're watching some of the swings and seeing it up $1.30 and then up 20 and then up 80 and then up 10, you're seeing some of those swings, and those are a little too much for you. Valero's one to take off your watch list because that's the norm for Valero, and this has been a calm kind of a time here for Valero. Hopefully it breaks out of this little triangle consolidation here. Would be definitely nice to see. Now, as far as new signals on the board this morning, there aren't any, but few crossovers. IBM, nice bullish crossover here today with the 3 and the 7. This could ultimately be a trigger, but with the morning parameters being tighter, it just isn't triggering this morning. ConocoPhillips has a 3-7 crossover to the upside coming into it here this morning, and then Walgreens WBA also has a 3-7 crossover to the upside coming into it this morning. The only downside crossover is Schlumberger SLB, and which is interesting. Conoco, upside crossover, Schlumberger downside crossover, but welcome to this market. But none of them are qualifying as signals right here. I do suspect that one or two of these, maybe even three, could be signals by the close. But we'll see kind of how things play out and where things sit. Okay, so that's the challenge. Not making any changes right here. Two things as they sit, and we'll continue to hold. You can see the market S&P futures. They're back at 3,000. Here we go, 3,000 again, right? 3,000 again. But I want you to think of something. Now that we've had the Fed reaction, right? And, we saw what happened after I got off video yesterday. Fed Powell basically gave the market the impression that the Fed was done cutting rates. And, and then he backpedaled on that mid-conference. It was a very interesting conference with Powell, one of the more interesting ones that we've seen from the Fed in a very long time. Very defensive. But, I want you to think about something. You step back, and I know there's all the fears and angst and is the market going up? Is the market going down? All this, kind of stuff out there, and there's all this conjecture and reasoning of why this should happen and why that should happen. But I want you to think about, I want you to think of something here. Put yourself in the shoes of fund manager Charlie. All right, fund manager Charlie, he's going out and, he's got a lot of money in the market and a lot of investors kind of, wondering what's going on and trusting him to manage their money. And fund manager Charlie over the years has watched different markets kind of melt and different markets surge. And now he sees the Fed yesterday. And fund manager Charlie goes, you know what, maybe I'll sell a little bit. And he wakes up this morning and goes, okay, so what? I sold. Now what am I going to buy? Right? The problem that fund manager Charlie has is that stocks are still kind of the only game in town. Yeah, he can go buy a little gold, go buy a little US dollar. But what's he going to do? Take all his money and throw it in bonds? I mean, that's not going to make any return. There's just a lack of options, comparatively speaking, to other economic down cycles that we have seen, right? In other economic down cycles, we've seen other options that investors can go to, that investors can put money into. Fed killed all that back in 2010, 2011 with quantitative easing. The European Union killed a lot of that with their quantitative easing. I mean, rates around the world, we can go to many areas of the world and see negative rates, negative bond rates. You're going to go out and invest in that? There's a total lack of options. There continues to be a lack of options, and that continues to be a hefty story, and that story's not going away. And so fund manager Charlie wakes up this morning and goes, okay, all right, we have a little sell-off. All right, let's see. Is there something that I wanted to get into that I can go buy? And fund manager Charlie goes and says, all right, I got to get back into the only game in town, right? Microsoft, great numbers, great earnings, great company, lots of good stuff going on, still has good revenue growth, still has solid earnings growth, good margins. All right, I'll go buy some Microsoft, right? You think about it, and yes, I know there's all this fear. Where is it going and what's going to happen? But what are the alternatives? What are the options? The lack of options, the lack of alternatives is one of the things that's going to keep the market sustained. Now, will we have some more sizable pullbacks in the future? We sure will. And could this be the start of one? It sure could, right? But remember, tops typically don't happen off of new highs. They typically happen off of lower highs. And, we're pretty much in a market that, even with this blip of the Fed, if I back this this S&P chart out to an hourly chart, the Fed, we didn't break out of the range from the last month, right? And so, it is still one where, you look at the alternatives from a large investor standpoint, and there just aren't a lot of good ones. And so they're going to look at times like yesterday and, some of the panic that we saw and a lot of that algorithmic, right? And a lot of that kind of just stops filling and everything else. And they're going to say, okay, yeah, dropped. Here's my opportunity to actually buy a little bit. And we see a lot of this pattern out there. This Microsoft pattern out there. And it's not a pattern that, is overwhelmingly bullish, but it is a pattern that is overly, it is typically bullish, right? But, it's not one that I go, oh, man, this is 80% in their favor. It's like 52% if you go look at candlestick pattern odds. And so it's just, yes, it's bullish, but it's not tremendous. Now, you take a look at something like an IBM. This is a much more bullish pattern. Why? Because it's breaking above the high from yesterday, right? It had this sell. Now it's breaking back above the high from yesterday. And if you want to look at stocks out there in the market that have a very high probability of continued upward move after the action that we see this morning, take a look at this pattern. This is a very bullish pattern out there, and we're seeing it in several names. In fact, for the challenge, we're seeing it in IBM and possibly Walgreens, if Walgreens closes here just a little bit higher. Now, the candlestick pattern has nothing to do with the challenge algorithm, okay? Please note that. But we do see this really kind of bullish pattern coming into play with, with some of these stocks that are out there. So, if you're looking down your watch list, you see this pattern. It's an easy pattern to trade, too. You buy it with a stop on today's open price, right? That's the stop level. That's the way to play the candle, and we're seeing quite a few of them out there here today. Something like a Bank of America, not quite that type of pattern. Really didn't sell off yesterday. Didn't have a massive sell in it. We're talking about stocks that, got caught up in that sell and, then snap on back with a gap up, push above yesterday's high, and that tends to be a pretty bullish pattern overall. Okay. But perhaps one of the biggest reactions to the Fed has been the U.S. dollar. And the fact of the matter that the U.S. dollar continues to push into new highs. And this has some serious implications, right? This big move on the market dollar and big drop in stocks like Rio and BHP and some of these iron ore commodity stocks. There's a huge correlation here, and this is one of those correlations that is causation, right? The rising dollar is cause for a sell in these names, right? And so I know everybody's looking for, is the market bullish or bearish? But this market continues to be about sectors and individual stocks in individual pockets in the market, right? And it's a bear market for Rio right now. It's a bear market for BHP right now. It's a bear market for Vale right now, right? This rise in the U.S. dollar is really kind of hitting these stocks in a big way. Now, are they down to some interesting valuation levels? Oh, they most certainly are. In fact, they're very compelling at some of these levels. But if you've ever traded commodities, they tend to overreact, right? They tend to overreact to the fundamentals, meaning they get super fundamentally cheap, not just a little bit cheap. And, until we start to see a turn in the U.S. dollar, these are tough to buy, but they are in some very nice kind of investable positions from a fundamental standpoint right here. Me, I want to be a buyer of gold, right? I'm out of gold. I'm very bullish on gold, but I want to be a buyer of gold, right? And, we saw a big reversal yesterday. Gold is holding up so phenomenally well with the dollar hitting new highs that, it's just something that you look at and you just say, man, the chances of gold not printing new highs sometime in the future is so small. And you look and you say, well, do you buy gold? Do you buy options, right? Options, you have to predict the time element, which can always be a little dicey. You buy shares, you don't have to worry about the time element. And, it's just one of those where the action that we see, U.S. dollar versus gold, continues to make me more bullish on gold. Now, I'm not going out and buying short-term options on it here just yet, right? We saw GDX lag. We saw it underperform. We've talked about gold. What I want to see a retrace of this rally that we have seen in June and July. And then, then I'm a little more interested in going after it. But the U.S. dollar is having a big impact, right? And you look at the stocks that are going to be positively affected by a stronger U.S. dollar. A lot of those are tech names, right? Microsoft, the U.S. dollar strength, that's a positive effect, right? IBM, it used to be, hey, dollar up, IBM's going down. It's going down big. That's not the case anymore. They've changed some of those dynamics, and they almost seem to be benefited more by a rising U.S. dollar. But rising U.S. dollar tends to help home builders. But where I stand as far as like a Lennar. I think the fundamentals really took a big hit, but a KB Home is a little bit of a different story, right? Rising dollar, typically a benefit to a Home Depot or a Lowe's. U.S. retailers, typically, rising dollar favors them, and a Nike, for instance. But Nike, I haven't pulled the trigger on it yet, but you take a look at where Nike is. We have contracting Bollinger Bands. It's sitting right in the lower band. That's a very tempting spot, to be a buyer of Nike. Like I said, I haven't bought it yet because I do want to see how things play out, and I do think option prices are a little elevated this morning, but something high on my radar there to be a buyer of as we go forward throughout the day. It's not going to trigger bullish for the challenge. I know it's on the challenge watch list, but to give a bullish trigger, it does need a crossover to the upside of the 3 and the 7-day moving average, and we had a downside crossover yesterday, so it'd likely take a day or two to have an upside crossover. But I would not be surprised if over the course of this quarter we see money flow out of Under Armour and into Nike, just with that quarter that Under Armour had. It was, I think you can look at Under Armour's quarter and say, yeah, ultimately it'll go to new highs. But, it's just one of those where it's this type of action right back here. And, it's just going to be one where if you're an investor, you're looking, you're saying, do I buy Under Armour? Do I buy Nike? Who are you going to buy? You're going to buy Nike. And it makes total sense. And, I think this is one of the first times where you can say, hey, I'll buy Nike over Under Armour here this year. And, I do think that will kind of continue to play out as we go forward here throughout the rest of this quarter, at least. All right. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on here with you this afternoon, and we'll talk to you then. Take care.